Hello everyone. In this class, I am going to teach you about basis of accounting. It means the method or system used to record financial transactions and prepare financial statements. Means we need to follow some methods and system to record the financial transactions and prepare financial statements. There are two main bases of accounting. That is first one, that is cash basis of accounting, and second one, it is accrual basis of accounting. These are the methods or system used to record the financial transactions and prepare financial statements. Now first one, that is cash basis of accounting. See, it says that the transactions are recorded only when cash is received or paid. Means only when cash is received or when cash is paid, then only we need to record the transactions in the financial statements. See, I will explain this point through one example. For example, a company, it sells goods worth rupees 1000 in October. Company sold the goods of amount of rupees 1000 in October. But in October, they will not receive the payment for selling the goods. When they will receive the payment, they receives payment in November. They sold the goods in October but receives the payment in November. See, according to cash basis, the transactions are recorded only when cash is received or paid. Here, in this example, when we have received the cash, we have received the cash in November. Fine. So, we need to record amount of rupees 1000 in November. Fine. And not in October. In October, because in October we sold the goods but we have not received any amount. In November we have received the amount. That's why we need to record the amount of rupees 1000 in October. I hope this example is clear to you all. Now we will move to the second example, that is sale of goods on credit. Sale of goods on credit. Now we have to tell whether this example or this transaction, it is included in cash basis of accounting or not. See, sale of goods on credit, it is not included in cash basis of accounting. Why? Because under the cash basis of accounting, transactions are recorded when? Only, see here, only when cash is received or paid. But in this transaction, what happens? See here. So, this sale of goods on credit, it will not be recorded until the payment is actually made by the customer. After that, we can record the amount in the financial statements. Till that, we should not record this transaction. Once we have received the amount from the customers, then only we need to record this transaction. Fine. Here I will take one more example for this sale of goods on credit. For example, a company sells goods. Company sells goods worth rupees 5000. Rupees 5000. When? Worth rupees 5000 on credit. See here, on credit. On credit. When? On November 15. A company sells goods worth rupees 5000 on credit on November 15, and the customer pays the amount on December 10. Customer pays the amount on December 10. See, on November 15, they sold the goods on credit and customer pays the amount on December 10. Now in this case, when we need to record the transaction, see here, the revenue, it is recorded on December 10. That is when the cash is received. When we have received the cash on December 10, the customer pays the amount. So we need to record the transaction on December 10 as per the cash basis of accounting. And no entry that is made on November 15. Fine, there is November 15, no entry. Okay, on December 10, we need to record the transaction because the customer pays the amount on December 10. Okay, so as per cash basis of accounting, we need to record the transactions on December 10. Fine, I hope this point is clear to you all. Now, we will move to the next one, that is accrual basis of accounting. See, under this method, revenue it is recorded when earned regardless of cash receipt, and expenses are recorded when incurred regardless of cash payment. See, I will explain this accrual basis of accounting through one example. For example, a company, it sells goods worth rupees 1000 on credit in January and receives the payment in March. When company sold the goods on January on credit and receives the payment in March. See, sold goods on credit in January. Fine. And receives the payment in March. When we need to record the transaction here, when we need to record the revenue in this example. See, in this accrual basis of accounting, it says that revenue is recorded when earned regardless of cash receipt. Means in this basis, the revenue it is recorded in January, not in March, because when the sale is made in January, not in March. In March they received the payment, but when company sold the goods in January, so this is accrual basis of accounting. See, we will take the same example for cash basis of accounting. According to the cash basis of accounting, we need to record the transaction in March, not in Jan. Why? According to cash basis of accounting, the revenue it is recorded. See here, the transactions are recorded, or revenue it is transactions are recorded only when cash is received or paid. As per the cash basis of accounting here, we need to record the revenue in March, not in Jan. But in accrual basis of accounting, revenue is recorded when earned regardless of cash receipt. We should not consider the payment here, receipt of payment. Just we need to record the revenue when it is earned. In this example, in January they sold the goods. In January only we need to record the transaction, not in March, as per accrual basis of accounting. I hope these two bases of accounting, that is cash basis of accounting and accrual basis of accounting, both are clear to you all. If not, please leave a comment. Thank you.